Scott, great to see you.
Thanks, Raoul. Thanks for having me.
We've got a very kind of broad international audience, so I know most people know who you are, but there's a bunch of people who don't, so I'd love to hear a bit of your background.
So I teach at NYU, teach brand strategy and digital marketing, native of Southern California, raised by a single immigrant mother, entrepreneur, started a bunch of companies and turned to academia about 20 years ago.
Why did you go to academia after startup world?
For me, startup world, so I initially thought I would get a PhD. I always wanted to teach. I had some personal stuff, capitated it at an MBA, and gave myself 10 years in the private sector to try and make some money, and then said I would return to or go to teaching. And exactly 10 years after I graduated from business school, I joined the faculty at NYU. So entrepreneurship's just always been for me actually entrepreneurship and investing have always been just a means such that I could afford to live in New York, and, at a lifestyle I wanted to live, such that I could teach. So teaching's always been my main gig. The other stuff has just been so I can live in New York.
So look, what I want to pick your brains about, I've got a thesis. I don't think it's exactly groundbreaking for you, but I call it the Exponential Age, where if I look at the next 5 to 10 years, we're at this confluence of events where we've got this mass adoption of all of these technologies at the same time, be it everything from EV to robotics to AI to 3D printing to the metaverse to Web 3.0 to all of these things, 5G, all coming together at the same time, reaching adoption. So, we saw a lot of this being built out over the last decade, really, but it now seems to the point everything is unlaunching at the same time. And I think it's going to be one of the biggest periods of change we've ever seen. And I know you've been, at the forefront of looking at all of this. How are you thinking about where we are in the world right now in terms of technology, business models, and all of that? I know it's a big question.
Yeah, so just listening to you articulate that, I think it's a neat idea, and it kind of reminds me a little bit of Peter Diamandis' singularity, right? Yeah. That processing power and network effects, facility with technology of a new generation that kind of grew up with these technologies, the decentralization of power, or everything from central banks, and that the whole might become greater than the sum of its parts. I think that's a really interesting frame. The thing I will say about, quote unquote, the singularity is that I've been following Peter around for the last 10 years. We kind of bump into each other once a year at a conference where we're both sort of paid guns to come speak. He's the optimist, talking about how we're going to be growing a new ear with stem cells, and you'll be able to regrow an arm, and we'll be on Mars. And I'm the pessimist. And I say both of us have a role. Without optimists, you wouldn't have had the Wright brothers, but without pessimists, you wouldn't have seatbelts. I find this stuff typically doesn't happen as fast as we'd hope, and then a lot of it is a head fake. I think the metaverse is a huge head fake. I think virtual reality is a head fake, 3D printing, wearables. So I'm a bit more of a cynic, if you will. The frame I would use for exponential change is that a crisis is a terrible thing to waste, and that it's actually the crisis of the novel coronavirus, which will be responsible for more mortality in the U.S. than all combat deaths combined in all wars. Granted, that's apples to oranges. Younger people died as a percentage of population, still more people lost in war. But it gives you a sense of the scale of the crisis we're in, or hopefully just coming out of, hopefully. And it's been tremendous. It's been tremendously motivating to rethink things. So the way I think of it, and in your world, they call it decentralization. I think of it as dispersion. And that is, we're re-examining the supply chain around everything. Because the supply chain, if you will, is being reshaped such that the source creator of intellectual property or value or scarcity credibility, if you're Bitcoin, and then the end client or constituent, whether you're someone getting healthcare, someone looking for alternative investments, whether you're someone trying to absorb content, the reshaping of the supply chain means more value or more margin for the creator and lower friction and lower cost for the end user. We are reconfiguring the supply chain across almost every major industry. In my industry, we're dispersing education from campuses and admissions departments out to the end user. In your industry, we're dispersing the scarcity credibility that central banks used to have, but they no longer have. We're dispersing investment opportunities from Goldman to Coinbase. There's enormous dispersion in financial services. There's an enormous dispersion away from hospitals and doctors' offices. Pre-pandemic, less than 1% of doctors' offices were virtual. Now it's a third. We used to have to go to this thing called a movie theater. Now we've dispersed better content to our living rooms. So a reconfiguration of the supply chain, I think of it as more kind of the boring stuff. And that is figuring out a way to take healthcare, education, fintech, or finance to the end user by reconfiguring the supply chain. The singularity you're imagining, I buy the argument. I'm consistently disappointed when people outline this vision for technology resulting in some sort of explosion in productivity. I find that our eyes are usually bigger than our stomach, that it doesn't happen. I mean, we were supposed to have 1 million autonomous cars on the road this year. And I think there's 1,400. The technologies that people get most excited about, I find are usually the most disappointing or the most overhyped.
I must admit, when I look at these, the exponential curves are kind of weird because as humans, we think in linear function. I actually had Peter on this show a while ago, but exponential curves, they start really slow and then it's this weird hockey stick that happens. And
it's parabolic, yeah.
And that parabolic is really hard to predict. So it looks like nothing's happening. Suddenly everything's happening. It's like, we've seen it with mobile phones, the internet, all of that kind of stuff. So, I think the interesting thing here is the dispersion that seems to be real, that's happening all over the place, versus the old system of concentration. And I know you've been very vocal about the concentrated system. How are the kind of holders of power now going to adapt to this? I mean, we've seen Facebook talking about renaming themselves Meta to try and desperately find a place in this new world. How are you thinking they're going to deal with this? Because it is really anti the big four and institutions like the banks and government and a bunch of things.
Yeah, that's the correct question. So for the first time, I think Visa and MasterCard are amazing businesses and they trade at incredible multiples. They basically have a duopoly. And I don't know if you saw the news today, but Amazon has said, we're no longer going to accept Visa in the UK. So this really big flare has been shot across the bow of Visa. And there's now new fintech technologies that reduce or compress the margins of processing fees. In terms of big tech, I see an existential crisis potentially for Facebook at the hands of Apple. I think when we talk, so let's talk about the metaverse. This notion that you have a series of internet services that break down geography and take you to a series of different kind of realities that mimic the real world, but break down geography and offer you more enjoyment, more utility. I think the metaverse, the vision of the metaverse is going to be realized, but not by Facebook, but by Apple. I would argue that the closest thing we have to a metaverse right now is the App Store, where it takes you to these incredible virtual environments where you can see a car coming to get you on with the Uber app. I can see my portfolio on the Goldman app, all off my phone, and it takes me into these different, if you will, metaverses. And most of my investing insight comes from Disney Plus, and I love Loki. I watch with my kid, and the key to getting to a different universe is a portal. You have to have a seamless portal that says, we want out of this universe into another one.
Yeah.
And Zuckerberg is betting on the Oculus, which sold 3.5 million units, 40 to 70% of people who've worn this report feeling some sort of nausea. And I find it comforting that I think this sociopath who cannot be voted out of office is going to fail. I just think that it's dead on arrival. I don't think anyone's going to whip out an Oculus to talk to I was interviewing the Nikkei at the Crosby Bar, and he said, I'd love my editor to hear this. And the idea that we were going to whip out Oculuses and talk to his editor is so ridiculous, but he pulled out this and FaceTimed him. And so you have a central server, and we both had these on. These sold 115 million units next year. So this is the portal. This is the central server. And then the key to the metaverse is no one individual can build a universe, no one company, regardless of how big. So you have to be able to create incentives such that they invest massive amounts of human and financial capital. Look at the probably hundreds of billions, or if not trillions of dollars of capital that have gone into apps. So I wonder if Apple, and then you have trust, which is a key component. It's more of a democracy because Tim Cook could be voted out of office theoretically. It's a single class of shares. So I think that there's going to be these two enormous transfers in value to Apple over the next 6 months. And it's Tim Cook's going to get on stage and without mentioning the metaverse or without mentioning Mark Zuckerberg's name, is basically going to say the metaverse is here and it's called the App Store and Apple. And he's going to talk about augmented reality, not virtual reality. And we're all walking around with these things, which is huge. And then he's going to show an image of a car with an Apple logo on it. And I think Tesla's going to shed or transfer $100 to $200 billion in value to Apple. I think Apple is the big winner in all of this. But it's to your question about sort of this decentralization. I think of it as dispersion, and I think of it more as around boring stuff around supply chain reconfiguration, where we're skipping the traditional nodes, the school, the campus. I wonder, and I'm curious to get your thoughts here. I think Coinbase is the AOL. I don't understand. How is Coinbase not AOL in the 90s? And that is, it's made it friendly. It's a great on-ramp. But over time, isn't the whole idea of the decentralization and DAOs and Uniswap and gas and all the things you talk about, doesn't that ultimately mean the margins get wildly compressed at a place like Coinbase and it ultimately goes away? So I'll put that back to you.
Yeah, it depends for me. I've thought about the same thing. Are they just another bloody exchange of which we've seen thousands, or brokerage house, right? It depends what else they build. You know, it really depends, much like Apple and most of these companies, it depends how innovative they are with their business model. Because right now, there's no moat around it. They just happen to be the first and the biggest. As you say, that just looks like margin compression to anybody else. But this space is moving really fast. We don't really know where it's going and who's going to develop new things. Because this whole Web 3.0 thing is really fascinating. Because that is a whole different way of looking at things. And I don't know where Coinbase is going to lie, but But I see the decentralized versions of this too, and you think, wow, okay, this is really different because there's no humans involved. I mean, talk about margin.
Yeah, 100%.
So, I mean, Apple's something I've been looking at as well. I think people don't really understand what Apple's been working on with augmented reality. But that's where they've pivoted the entire firm to, really, as you said, because they've won a game, and the game is this. We have a huge piece of computing power in our pockets that we carry around with us. They've moved towards spatial headphones. So you've got this new immersive sound. And from what I know, these new phones, the new version, this is the new 13, they ping the environment around you 5 million times a second or something ridiculous to kind of geolocate, because Apple is building out this augmented reality mapping of the world. And it seems that, as you say, this sounds more intuitive for all of us. And sure, Apple may develop glasses, but at least they're more like the glasses you're wearing than this ridiculous headset. I can't put on a headset because I don't know if my dogs are eating the carpet or doing something else. Once you've got your headset on, it's a nightmare. What are you aware of Apple doing in this space?
So I don't know anything that anyone else doesn't know, but I think my team does do is we troll the patent filings, and Apple has filed for a patent to put a small camera at the base of this. And I think another mistake we make is that I think we overestimate the role that sight and vision will play in the metaverse and underestimate the role of sound and audio. And that is, I think the metaverse looks more like the movie Her than it does Ready Player One. And that is, I would argue that the closest thing we have to a ubiquitous adoption of a metaverse is imagine, I mean, there's just so many people walking around New York that are in another world listening to Spotify. And I have Google Maps open because I can't get anywhere. And then it interrupts it and says to me, right in 50 feet. And then Siri says, incoming call from Catherine Dillon, accept it. I mean, I'm sort of got one foot in three other universes right there.
Right.
And I can get pretty deep into stock. I mean, you are kind of, your consciousness in one universe, it goes down and down and down, and I get more and more absorbed into other things. What will be really, I think, the most utile, one example is you're walking by, you're looking for an apartment. I'm going to London in a few weeks to check out boarding schools for for my oldest, and we're contemplating a move to London. And what I would like is when I'm in a nice area, I don't know enough about London to really know where to live. What I know is I'll be in an area and I'll think I like it here. I would like to be able to put on my headphones, walk around, and hold this up to an apartment building. And it immediately creates an image of these 4 units are available, and this is how much it costs to live here. And here's the apartment, who's the broker, background, user reviews. You can just imagine anytime you walk by a restaurant holding it up and hitting a button and it says, oh, this is Daphne's. It's a great restaurant, great to eat at the bar, and some reviews. You can just see augmented reality, in my view, is got much bigger potential than virtual reality. And the ease of a central server in this, to me, it's like, okay, that's where you're going to create a lot of shareholder value. It sounds more pedestrian. It's not as interesting. But I think that, in sum, I think Apple hits $200 a share. Facebook has an incredible core business. I would never want to talk down that stock. It looks like it's reasonably valued because of all the headline risk. But I think the metaverse, and it doesn't matter, they can waste $10 billion. I think it's going to be a giant thud because they're doubling down on the Oculus, which just makes no sense to me. I think it's DOA because of the device that they're betting on.
Yeah, look, I agree with you. Augmented reality is something that is easier. But everything being digitized to me is the metaverse. This digital fluidity, I don't think of it as the Ready Player One world in any way, shape, or form. I just think of it everything moving to digital, and we move between those worlds. What's interesting to me is Facebook is also launching Diem, which is their cryptocurrency, their stable coin. And to me, this starts to look a lot like a sovereign nation state, but a digital one, because you have 3 billion people, whatever the number is. You have a kind of organizing set of principles where communities come together, and then you have a system of money. I'm very interested in that. Now, whether they win in their version of the metaverse, whatever that is, and how open it is, we don't really know yet. But this putting the system of money around their platform and their communities gives it an extraordinary power because it does create further network effect. I think we're moving into a world that is entirely something different because once you tokenize some of these worlds, they do become entirely different states. They charge their own taxes. They have their own organizing set of principles. These are complex adaptive societies, and this is how humans have always dealt with them. It feels that these platforms are still going to get more power. There'll be new ones that come, new giant communities that get more power. But it feels like if you're creating states, that's something different.
Yeah, and so this is where the glass half empty in me comes out, and that is, which is most of the time. So I was in Cannes for the Creativity Festival. I think it was in June of 19 when they announced, it was called Libra then. Then they changed the name to Diem. I'm not sure why they did that name change. Facebook is really, you have to take Facebook seriously whenever they go after something like this because they have a lot of data on a population greater than the Southern Hemisphere plus India. They have 3.5 billion people who are on one of their apps at least once a month. They understand the relationships. They might even have, I don't know if they have credit card data on how many of them they have, but the idea of a stable coin launched by Facebook, I think is a viable opportunity. Where I go to a dark place with this or an Orwellian or dystopic view is that if you look at the key steps to tyranny, it usually involves a sociopath who starts off benign. These sociopaths don't wake up and say, I'm going to be evil for the rest of my life. That's not how they think. And there's 3 key steps. You get control of the media, then you get control of the economy, and once you have those 2, you get control of the military. And the idea, so I sort of think Facebook's won. I think they control the media globally. I don't think any company has as much influence over the content we absorb. When I saw those tapes of those insurrectionists storming the Capitol on January 6th, I look at how they were behaving and what they were saying, and I thought, these people have lost their autonomy. They genuinely believe they're patriots. And I thought, how did so many people get into a bubble that was so false, such in my opinion, a bubble of misinformation? And I think it's Facebook who says to you, oh, you think the election is illegitimate? We identify faster you think that way than any organization in the world. And we begin confirming that and taking it to an even uglier place. I think people who haven't gotten vaccinations in the US, we on the left like to be both siders. I think you have your head up your ass if you haven't gotten a vaccine. These are the most tested vaccines in history, safest vaccines in history, 300 million shots, and we're supposed to feel for the other side. And yet I know very intelligent, thoughtful, reasonable people who have huge hesitancy around the 16th vaccine we've asked them to take. I literally don't get it. And I reverse engineer a lot of it to the bubble, sensational novelty theater that is Fox and other cable networks. But then Facebook takes it and just, like you said, goes exponential with it. I see that Facebook is sort of won around media. I don't think any organization has been able to take people one way or the other faster and more efficiently than Facebook. I think no company has ever controlled media globally on this scale like Facebook. The idea that they might get to the same scale around the economy to me is terrifying. And I'm comforted by the fact that so far they seem to be failing. And this is an investment show. The organization that I think might surprise everybody in terms of finding alpha and dislocation is that I wonder, so this is what I think is going on, and I'm a bit of if this sounds like a conspiracy theory, fine, but it doesn't mean I'm wrong. With social media, you have a way to sort of softly manipulate your numbers. And that is there are tens of millions of fake accounts that pop up in every social media platform. And you can clean them up. They know they have algorithms that kind of identify a suspicious account and then wipe it out. Facebook has deleted billions of accounts. But say you're worried about making your numbers, you don't delete quite as many accounts that quarter so you can report bigger numbers and sell more quote unquote eyeballs, even if they're fake eyeballs, to an advertiser, and you can juice your earnings. And then you realize it's getting out of control, too toxic, too many fake accounts, you clean it up, that suppresses your earnings. I think there's a good chance that Jack Dorsey is going to find a lot of religion around cleaning up fake accounts on Twitter, report shitty numbers. His stock's going to go below $40, and then Square is going to step in and acquire Twitter. And he will reunite his sister wives such that he can have one office the whole day. And then overnight, we might have a viable 10-cent, a payment and social platform. And to me, Twitter now has some apps that you can pretty efficiently, my understanding is pretty efficiently remit and transfer payments across border. And so I think Twitter has the opportunity, if they're acquired by Square, I should say Square or Twitter Square or Square Twitter, whatever you want to call it, could say we're the 10 cent of the West. Because I think what you're about to see, Raoul, is in 2022, we're about to see the white flag drop on the ultimate business race, and it's going to be the race for super, or specifically the race for a super app in the largest economy in the US, where there isn't a super app. We have one in India with Joe. In China, we have Baba and we have Tencent. There really isn't a leader for its super app status that brings together social, payments, ride-hailing, media in the US. So I wonder, just as we're all focused on VR and the metaverse, I think that's more hype than it is. I think that's more fluff than it is substance. I think the real war that's about to break out that will reallocate hundreds of billions in value in 2022 is what I loosely call the race for super. And I think whatever social media company comes together with payments, whether it's Amazon in a stable coin, Facebook in a stable coin, or Square backing into social by acquiring Twitter, I think that's the most exciting, if you will, business story of 2022, the race for super.
Yeah, I've been looking at this Twitter idea and thinking it through myself in exactly the same terms. Is you can see what Jack's building, and basically he's building a Web 3.0 platform where communities can exchange value amongst each other and take a share of the community. It's fascinating. I agree with you. I think it's wildly underpriced if he pulls any of this off. Does he have to integrate Square and Twitter? Don't know. But it would be a lot easier if he did, because then it suddenly all makes sense, because he's got a huge audience which has been under-monetized, but 100%. There is trust. I mean, we all use Twitter. We like it. There's no other platform to use that's anything like it.
Yeah, I hate Twitter and I'm addicted to it. As soon as your pod comes out, I'll go on. I'm a rabidly insecure person. I'll want to see how many likes I got in the comments. And the 5 to 10% negative comments keep me coming back because they enrage me, and enragement equals engagement. But the other thing I think you're going to see is the new kind of masters of the universe are fintech. And that is, if you think about the social media companies, other than Facebook and Google, who have such scale and such incredible tools, they can monetize it. The other social networks are these incredible value propositions, incredible utility for the end user, and they sit on top of really shitty businesses. So Twitter's really never, given Twitter does not command the space it occupies. Twitter's like a modern day New York Times, and that is hugely influential, but really doesn't monetize it that well. I thought I wouldn't be surprised if PayPal at $250 billion revisits the acquisition of Pinterest, because Pinterest is another incredible company, incredible value proposition, stuck in a shitty business model where they take all this joy, attention of wealthy people who are interested in redecorating their kitchens, and they serve them these really shitty ads for flooring that pollute the network now. So what you have is 500 million monthly active users on Pinterest. And if PayPal can come in and monetize, just get 5% of those users to sign up for PayPal or use the platform more, they can better monetize it. So what you have is this arbitrage of passion and engagement that media is great at. So if you think about Apple TV Plus and Amazon Prime Video, their multi-billion-dollar budgets make no sense when you look at the media business in and among itself just as an isolated business. Apple TV Plus makes no sense as a unique business. Prime Video makes no sense as a standalone business. But if they can reduce the churn on Amazon Prime, if they can increase the NPS on Apple such that people are willing to pay higher margins or maintain those incredible margins they get, highest tech hardware margins in history, then it is worth it. There's an arbitrage of media, of passion, and NPS to better businesses, specifically selling handsets or recurring revenue around Prime. You're about to see that across all of media. So Amazon comes in and overpays for MGM. No other media company could get anywhere near that valuation, looking at MGM as a media business. And I think the same thing's about to happen in fintech. I think you're about to see these big fintech players, whether it's Square, whether it's Stripe, whether it's PayPal, come in and start buying a lot of other assets with their, what I won't call it cheap currency, but their fully valued currency, and try and pull off super, if you will. Because, I mean, $250 billion, PayPal's $250 billion. It was spun out of a company, eBay, that I think trades at 40 or 50 billion. I mean, these companies, they're talking about Stripe going out at 200 billion. I mean, these are massive valuations. And so all of a sudden, if you look at the last quarter, more unicorns birthed than in any quarter in history. And a preponderance of those unicorns were birthed by fintech. So the fintech players are about to become kind of the new masters. And I think they will go, okay, can we really justify $250 billion valuation? Let's back into it by going and buying the components to build super. So I think it's going to be an exciting year.
Once you add community around fintech, you've got something very powerful. It's as simple as that. The other one who's doing it a different way that I think is a sleeping giant is Reddit.
It's a great one.
Reddit is creating, it's tokenizing its communities, which, as we know, is an incredibly powerful way of generating network effects. Nobody's looking at Reddit because it's of a certain type of people who use it. It's huge, but nobody looks at it. What's your view on Reddit?
I think Reddit's a juggernaut. The question is, how does it monetize that attention and that passion? And not only that, I'm really inspired by Reddit. I was like very much a boomer early on with the meme movement and thought this is stupid and ridiculous and this is bored young men at home. And what I realized, I actually went on to Reddit. There's some fantastic analysis on Reddit. There's some really...
It's a great hive mind of information, right?
All the equity analysts' jobs who went away from investment banks with Sarbanes-Oxley, where we can no longer monetize equity analysts, there are so many what would have been $1 million to $2 million a year equity analysts working at Goldman and UBS on Reddit doing fantastic bottoms-up valuation. I'm really impressed by it. So the question is, how do they forward integrate? The most obvious one, and full disclosure, I'm an investor. So if you look at Robinhood, if you look at the valuation these apps are getting, these trading apps are getting, investment apps. I'm an investor in something called Public, which is like a Robinhood, but they don't sell order
I'm
flow.
speaking to
And
them
they're
this
big.
afternoon, actually, to Public. Super
Oh,
interesting.
really?
Yeah.
But what they've tried to do is they've tried to do what you've said. They've tried to create a community. They've tried to build an investment app on top of social where you talk about your investments. I can see Reddit acquiring Public. I also think you're going to see Citi, B of A, Goldman, and JP Morgan panic and start going in and overpaying for little guys because they have to go full stack. I think Goldman has an opportunity. I think if you started a sub-brand called gs.com, that was a trading or investing app that had robo-advising, ETFs, stock trading, I think there's millions of young people around the world that know what Goldman Sachs is, see it as a self-expressive benefit brand, would like to say, I trade on GS. I think that's their opportunity, is to go into that. JP Morgan, not as much. It's not as quite an aspirational brand, but it has that. But I think you're about to see all these smaller fintech or anything that's full stack. Companies are going to go up and down the stack. I think Reddit needs to start acquiring something that gets them out of what I'll call the advertising. Here's the bottom line. Advertising is just a shitty business.
Yeah.
If you're watching ads, it means your life hasn't worked out that well. And we have all these incredible companies producing amazing content, whether it's bottoms-up financial valuation analysis or producing Modern Family. And then we pollute it with shitty ads telling us we have restless legs or opioid-induced constipation. And the thing is, even worse than that, they get cents on the dollar for pelting us with this nonsense and this garbage. So the opportunity to change that, again, to arbitrage that engagement in those communities to better ways to monetize is going to happen. And Reddit, there is a pony in there somewhere. Reddit could be the beginning of some sort of super app, or if you're Goldman, it's like, how did you let Coinbase happen? That's what I would be asking the CEO of Goldman right now. How on earth did you let Coinbase happen? How did you let Robinhood happen? Coinbase and Robinhood combined now have a valuation greater than Goldman Sachs. And it'd be like, well, they're in the business of trading and create a market for securities. As far as I can tell, it's like, isn't that what we do? How did you let that happen? So Reddit immediately overnight is going to give some traditional player or some new player massive community, massive engagement. I think the key there is I don't know the cap table. I know that the new houses used to own a piece of it, but I don't know the governance or what they would do. And also, do you in anywhere queer or pervert that incredible notion of like an underground resistance that Reddit has? But I agree with you. I would love to invest in Reddit. I think it's an incredible opportunity right now.
Yeah, I mean, we've been looking at the same thing for Real Vision, just thinking, can we create the super app or the super community of finance and layer in all of these things? That's the reason I'm speaking to Public and others, is like, can we integrate brokerage where you can get a reward system based within it? So it becomes intuitive part of the entire experience. Can you bring different experiences in? Can you create asset management businesses on top? How can you bring this all together? Because that is the new world. And once you've got community, you've got everything. And crowdsourced, I think the future is crowdsourced, the hive mind, as I refer to it as, because we're now proving, even within Real Vision, we've been surveying our members for like a theoretical portfolio in crypto and in macro. They've outperformed the experts and the benchmarks because they're a smart group of people who've been given more information by being a member of the platform, and the hive mind does well. And I think that is the future, as opposed to the guru from Goldman telling you this is how it is. It's what you say. It's all of those analysts who are on Reddit who are creating this super community. I think it's really interesting.
Well, you have two components. One, there is a wisdom of crowds. When you present most questions to a crowd, they usually get it more right than wrong.
Yeah.
And two, the crowd's decision and sentiment becomes a self-fulfilling prophecy in investing, because if they get excited enough about something, they start creating confirmation bias and they all start buying it. And then they see that the coin or the stock goes up, which lends more credibility to the initial thesis, and you create an upward spiral. So it strikes me like, I'm playing armchair consultant now.
Yeah.
You have engagement, you have passion, and you move from a shitty business model, or I don't think you're ever advertising, to subscription. But again, your temptation or the opportunity will be to go full stack and monetize it and monetize. So there needs to be a layer of information and media above Enter DAO, a new coin that is supposedly creating new technologies and utility for the metaverse. The coin was recommended to me. I'm a no coiner. I don't own a single coin. I am investing in crypto, but in the picks and the shovels.
And I came on your podcast and gave you my best impassioned speech, and you still didn't fucking buy it. How dare you?
Well, here's the thing. I mean, and of course, one of my many flaws as an investor is I always want to buy stuff on sale. And no matter where it is, I benchmark it at that moment and go, I want to buy it 30% where it is now. So when Michael Saylor came on my podcast 14, 15 months ago and said, buy Bitcoin, it was at 18,000. I thought, this is definitely going up. When this many smart people and this much capital is going into this thing, it's just going to go up. And I thought, I'll just wait till it gets below 14 or 12 because it's so volatile. And, here we are. I never got in. And I also generally, at my age, I'm looking not to get rich. I'm looking not to get poor.
Yeah.
And so I won't invest in anything that I think there's a non-zero probability it could go to zero. And some of these coins, I do believe there's going to be a washout. I think it could go to zero. What I have done, though, is I've invested in a company called Ledger, and I've gone on the board, which creates this cold storage hardware wallet. So I'm trying to find the picks and shovels because my attitude is if you're in the late 90s, you don't even understand then that Amazon's going to win, or if it's eBay, or if it's Lycos, or if it's Alta Vista, or if it's Google. It wasn't entirely clear back then who was going to win. But, kind of the infrastructure guys did pretty well. I mean, Cisco became the most valuable company in the world. Granted, it dropped 80%. But until I understand more, I'm investing in the picks and shovels. But this is a long-winded way of saying a layer of content and education. I type in Solano and I get a bunch of analysis that is community ranked.
Yeah.
That, gets thumbs up. This individual is just the most insightful person around this type of coin. And this person does the technical analysis. And this person tracks the flows. And this person understands what I'll call the bullshit or fraud meter. And that is, okay, it's the squid coin and the fraud alert here. There's red flags everywhere, right? But something that creates a layer on top of that, like the equity analysts used to do. I mean, it used to be equity analysts, CNBC, and Barron's, and it's being distributed or dispersed to these individuals. But I think there's an enormous opportunity in Reddit and your organization could be that layer.
Yeah, that's exactly what we're looking at. Another interesting one. I think you're an investor. Yahoo.
Yeah.
What happens with because we share a mutual friends with Ari A and Lion Tree and stuff like that. But Yahoo is a really interesting business, particularly Yahoo Finance, because we're talking about finance, right? Something both you and I are passionate about. Yahoo Finance was the most mismanaged property in the entire world with the largest top of funnel. Super interesting to see. What is your thought on that?
So Yahoo is one of my biggest investments. And I mean, it's a couple things. One, I'm really fortunate. I have close friends that I met in the 90s and 2000s in New York that all grew up, a lot of them grew up to be kind of masters of the universe, running hedge funds, private equity funds, and distressed credit. So I get more than my fair share of access to interesting private deals, and people want me involved, rightly or wrongly. So I get better deal flow than most profs. And the private equity firm that bought Yahoo came to me. I've always been a huge evangelist of Yahoo. Now, having said that, I said Marissa Mayer was one of the worst tech CEOs in history. They took an incredible asset, managed to cut revenues by 20% and EBITDA by 50% and walk away with $250 million. So I thought it was incredibly mismanaged. And it all starts from just a personal experience. Yahoo Finance has been my homepage for the internet for the last 20 years. I still look at options prices and stock prices on Yahoo Finance, and I think they do a pretty good job. I go on Yahoo Finance on TV there. I like the people. I think it's well run. And here's the thing. As an asset class, I've made more money in distressed than I have in growth or VC. Why? Because when you go to a party over the holidays, you'll have your friends, and then your friends' parents will show up, and your parents will show up. And you'll be nice to them, but you generally don't want anything to do with old people because they're dying. We have a hugely ageist society, and that is but when there are kids show up that are 15 or 18, or their young friends show up, we're fascinated by them. They're full of hope. They're better looking than us. They're more interesting than us. We are just drawn to youth. So it's the same is true in investing. And that is, there's nothing like the hot young company. We all want to get near it. Whereas distressed investing is like, it smells funny in here. I don't want to be around these old people and these old companies. My best investment the last several years has been in a Yellow Pages company because we bought it for 2 times EBITDA. And I said, okay, we're going out of business, but we're not going out of business in 24 months. So as long as this business is around in 24 months, we're going to start cash flowing. And what do you know? It's 7 years later and the business is smaller, but it's still a 60% EBITDA business. So I love distress. Now, Yahoo isn't distressed, but here's the numbers, and these are public. Yahoo is the 4th most trafficked site in the world. It's just behind, I think, Facebook, Google, Amazon, and then I think it's Yahoo. It gets 950 million monthly active users. So one is $1 trillion, one is 1.6 trillion. I think Amazon's headed towards 2 trillion. And then the number 4, they bought for $5 billion with 600 or 800 million on the balance sheet or 400 million. Plus they immediately sold off Yahoo Japan for like 1.2 billion. So you basically bought the 4th most trafficked site in the world for $3 billion that's doing several $100 million a year in EBITDA. I'm like, even we couldn't figure out a way to fuck this up. So you're coming in to the 4th most trafficked site in the world for like single-digit multiples on revenue. On EBITDA. And I thought, okay, I absolutely love this because this thing could go sideways. And at some point, there is never a better deal. Never a better deal. I've been on both sides of this. The best deals in history in terms of acquisitions are when you're buying an asset from a corporate parent that wants to orphan the thing. Because Verizon correctly goes, we have an amazing recurring revenue business called 5G. And then we have this distraction called Yahoo and Verizon Media. Just get rid of it. Well, if we waited, we could get 10 billion or 8 billion. Fuck it. Just get it off the balance sheet. I don't want to talk about it. I don't want to answer questions about it in our earnings call. It's a distraction to my strategy. Oh, we have an offer for some private equity firm. It's not a great offer. I don't care. Sign it and get it out of here. And I think that's what happened. I think I've all my investments on a risk-adjusted basis when I look at the likelihood it would be worth less versus the upside. I also invested, Raoul, in Gannett with the same private equity firm. The thing trades at such a low valuation, has so many users, has so many readers. Will it be around in 30 years? I don't know. But it'll be worth more than it is now over the next 10 years because it's so cheap. Anyways, I love that part of the cycle. People really don't like old people and old companies. And on a risk-adjusted basis, I find distressed is the most interesting place to play.
And do you think they're going to split up? I'm not asking for inside information on this, but do you think the best thing to do with Yahoo is to split it up into different entities? Because they've got defensible moats around all of it. I mean, they're all really interesting parts. Yahoo Sports is interesting, Yahoo Finance is interesting, etc. Or do you think it stays as this kind of super conglomerate and they kind of just pivot it towards a kind of a newer version of itself? How do you think it plays out?
So first off, it would be impossible for me to give inside information because I'm not an insider. I'm not on the board. I don't have access to any proprietary information or non-public material information. The issue at Yahoo is not what to do, it's what not to do. And that is, arguably, Yahoo could become one of the biggest TV networks in the world. It's done a pretty good job of video. A lot of people watch a lot of video there, but you're still stuck in the advertising business. You could become what I'll call the premier, just as Google and Facebook are sort of the premier customer acquisition vehicles across anything digital. 40% of all venture capital raised will go to Facebook and Google. I think that we could specialize at Yahoo on what I'll call more niche, higher value things like newsletters. We could say, all right, we're going to go really deep in finance. There's a lot of amazing newsletters out there that make really nice livings, $2, $3, $5 million a year businesses. We're going to be the place you can acquire. We're the best CAC for what I'll call niche, high-end finance offerings. We could get into gaming. You think, all right, the fantasy leagues on Yahoo are some of the biggest in the world. What if we partnered with a company that has the back-end infrastructure around around gambling or gaming or whatever the correct term is, we could get into that business. So, I think there's a lot of opportunities here, with Yahoo. I think the hard part is figuring out what not to do, because you get on a call with management, you just start going through all the users, and, they have really weird sections you never hear about that have 50 million rabid visitors. And you're like, okay, there's got to be a way to monetize that more than just running these shitty Purina ads, right? So I think that it probably is something around niche customer acquisition at a higher LTV, or that you can charge more for, something around, and I got to believe that gaming. The other thing they could do is they've been selling all these ads for, E-Trade, Schwab, Interactive Brokers. I wonder if they should go full stack and go into that business.
I look at Yahoo and I just think it looks like it should be the full stack that you're talking about, that this should be one of these super apps, because they've got the audience. They just haven't got the applications. You just need to add applications and subscriptions on it and you've got everything.
Yeah, but Raoul, to your point, okay, if you're sitting on top of PayPal at 250 billion, and you're like, okay, we can get 1 billion engaged users for 20 billion, which would be 4 times what Apollo paid. Isn't that worth it?
Yeah, totally.
Okay, and let's take an 8% dilution, and we control the eyeballs of 1 billion users globally. Okay, that to me sounds like a pretty good bet. That's not even they could pay quadruple what Apollo paid. And Apollo, they're smart guys. They might say, okay, that 4x our money in 14 months. All right, we'll do that. And PayPal takes an 8% dilution. They might not even have a strategy for it. They make, okay, if of those 1 billion users, we can get 1% or 10 million people to convert to the PayPal platform, that's probably worth the price. I mean, it says, so what we have here is what I'll call 2020 is going to be super app, or at a minimum, it's going to be the arbitrage of attention and passion that media catalyzes or creates to a better way to monetize it, which is usually fintech. So I think fintech companies are about to become the great acquirers. And some traditional guys will get in because they'll panic when JP Morgan, when Jamie Dimon's board members start going, how the fuck did we let this happen all around us and we aren't playing ball here? Like the banks have done well, their stocks are up, but they look around them and they see all these companies. PayPal filed 28 times the number of patents last year as Goldman. And so I would imagine that both of their boards are saying, okay, we've been poo-pooing this stuff for long enough, but meanwhile, everyone's getting rich. And our shareholders are probably justifiably saying, why aren't we playing in this?
Yeah, my other view is that every company is now a media company, as also all entrepreneurs are now media entity. I mean, everybody's in media. And so the banks have pushed away media as hard as they could because they wanted this walled garden, and it's not going to last. So the fintech guys are going to break that walled garden down. And as you said, the traditional guys are going to have to follow. They can't be, well, if you come to Goldman Sachs, you only get the opinion of this one analyst. It makes no sense in this modern world because we're all on social media getting the influence of all of the great thinkers all together, and the banks can't pretend it doesn't exist. It's just, it's ludicrous.
Well, again, it's the same thing. And I think you're right. So I have a newsletter that goes out to 250,000 people on Friday. I have all my investments. I have an ed tech company. My most valuable asset, the one thing if someone said you can hold on to one thing, right? My wife wises up and kicks my ass to the curb and the judge says, all right, Scott, she gets everything. You get to hold on to one thing. I would hold on to my newsletter because the ability to communicate to 250,000 people in an engaged, passionate way around a variety of topics, that type of asset, that type of attention is going to be massively arbitraged up. And someone else, one of your colleagues, he's the super insightful guy around crypto. I don't know his name. I'm going to get it wrong. Bali.
Yeah.
He's famous. He's like you. He's like one of these
Balaji.
Balaji. Yeah, one of these big brain crypto guys. He said it very simply, and it was kind of genius. He said, every crypto or every fintech company is going to start a media group within it. And he's exactly right, because media, nothing inspires emotion and passion and engagement And Apple and Amazon have proven that. Makes no sense, but we'll spend $6 or $7 billion just to create slightly more. Peloton's going to be acquired because essentially Peloton's become a media company where they play the Peloton iOS in front of you. And at a $15 billion valuation, you have Nike at 250, you have Apple at 2.3 trillion or whatever. There's just no way that's not worth that money to them, that passion, that loyalty, that additional hour to 4 hours a week of attention. So it's sort of this attention, passion, engagement, massive arbitrage built on the backs of the checkbook of fintech that I think is about to happen. And what A16, the VC fund, did, they've started a media company internally. I think their first application, Clubhouse, is dead on arrival. I think that will be the fastest 0 to $1 billion to a zero valuation. I don't know how real that $1 billion valuation is, but that's essentially a group of venture capitalists who find themselves fucking fascinating, and not that many people share that opinion. But it's the right idea. That's the wrong execution, but it's the right idea to create a series of media assets that raise the visibility, because that business is all about deal flow. And if young people and young entrepreneurs are constantly turning to A16 podcasts or newsletters, and it's just top of mind, they can spill $100, $200, $300 million building out media assets.
And to your point, it's a stupid, shitty industry of selling adverts for that attention when you can sell a real business with that attention.
That's right.
Once you've actually got attention, don't break the trust of people, use it. And this is why I'm kind of obsessed with the Web 3.0 world, because everybody actually comes together because you're forcing your community to be part of this, as opposed to just being monetized the old Facebook way. And I think it's going to be absolutely fascinating.
Yeah, there's and then the opportunity for your users to participate and sell their content, and the Substacks, the Patreons of the world. You're right. There might be some sort of like convergence of it all, or singularity of it all. We'll see. I like that idea. Every time I get excited, I mean, I think of quantum computing, another head fake. I'm getting shit around this. I think artificial intelligence is another big head fake. As far as I can tell, the only way artificial intelligence has really impacted me is that it says, all right, you just watched Dope Sick, episode 3, and you watch the whole thing. We're going to start episode 4 and 5, 4, 3, 2. That's the only way I can figure out that AI is actually changing my life right now. And to me, AI is just an investment theme to describe someone with a college degree sitting on top of Excel and understands pivot tables. But I'm usually pretty cynical about new technologies, and they're used as sort of a means of hyping a stock or pumping a stock. The latest one is the metaverse. But I do buy your notion that at some point all of these things might converge, and there might be sort of an explosion or create some parabolic trends in some of the things you're talking about. We'll see.
We'll see. Listen, Scott, super interesting conversation. I really appreciate your time and be able to pick your brains on all of this, because none of us know where it's going, but it's fascinating, right? I completely agree with you that this dispersion that we're about to see also includes these this super apps, and that they're actually all part of the same thing. It sounds weird, but I think it's right, because I think the power goes back to the individual more than it has been to the controlling entity in the end. And I just think that's really interesting.
Agreed. Yeah, it's going to be 2022 is going to be, I mean, you could have more. I mean, so many different things could happen, right? If you look at, if you had a crystal ball and someone said to you, we're about to have the greatest health disaster in a century, and it's going to kill more Americans than have died in every combat death, would you think, oh, I should go buy stocks? So what you can see next year being another contradiction. I think we could head towards this incredible unleash that you're talking about, and we could see the markets go down 30%. I mean, it just could be such an interesting year. The only thing I know is we're in uncharted territory, and none of us really know what's going to. I mean, I have absolutely no idea what's going to happen next year. I've never seen anything like this, and I can't tell if it's 1997 or 1999. We'll find out in 12 months or so.
Yeah, exactly right. Brilliant. Thank you, my friend. Good to speak to you, and I'll get you back at some point soon.
Thank you, Raoul. Good to see you.
Hey there, revolutionaries. To join a community sharing professional insights like what you just watched, head over to realvision.com and get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Join our community of lifelong learners.